Team USA getting pantsed in Europe, 9.5 to 2.5. They are playing better in the four-ball session this afternoon. Meanwhile, Tigers fall to Cleveland 7-5. Miguel Cabrera 3 hits in his swan song weekend. 1:10 the first pitch today from Comerica Park right here on 97.1. NFL reinstating troubled lines receiver Jameson Williams come next week. He will be eligible to play against Carolina. Meanwhile, number 2 Michigan favored by 17 at 2-2 Nebraska today. That's at 3:30. And our brother station, AM 950 WWJ, Michigan State a 12-point dog at 3-1 Iowa, 7:30 tonight. And this, the group Spartan Dogs for Life is canceling NIL deals with multiple MSU football players. Central Michigan hosting Eastern today at 1:30. Western hosting Ball State. Concordia at Wayne State at 6. Red Wings host the Capitals tonight at 7. At the Ticket Update desk, I'm Jeff Lesson. For more 97 on the Ticket or Odyssey.com.
Good morning, and you're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding, which is powered by Fairway, MLS number 2289, Equal Housing Lender. We're going to give you 1 hour of everything mortgage, everything real estate, and everything fun in life and all the things, because we got a rock star in the studio with us. Before I get to my girl here, I got Mr. Harry Glanz in the studio with us.
Good morning, everybody. Good morning, Becky. I'm so glad to be here. And, we're going to discuss a lot of things mortgage and real estate with our panel. But I'll let you introduce the panel. But what would a Friday at the end of the month be in the mortgage and real estate business without a lot of craziness going on? We're going to talk about it. It always happens Friday, end of the month, getting it done. Let's talk to our next guest. Introduce her properly, because here we go.
All right, we got John Kolb, fellow from Capital Mortgage Funding as well. And anyone that is a fan of our show, you know who I'm about to introduce. We got Renee. She is the fearless leader from RLA Real Estate Group from Keller Williams Domain. She is a real estate titan, an amazing story. Anytime she's in the studio with us, I actually really enjoy it because it's just always really good conversation. So Renee, no stranger, thank you for joining us.
Thank you. Thanks for having me again. Always a pleasure to talk to you brilliant people about all the fun things called mortgage and real estate.
I'm about to go get your sunglasses because they got rid of our shades in here. So we're in the process of doing a studio revamp, and they've taken the shades down, and we're in the very morning fall sun in Renee's eyes right now. I feel bad.
So Renee, John, and Becky, what is it about the last week, the last day of the month, closing-wise, on purchase transactions, when it falls on a Friday? What happened? It's like Halloween over and over and over again. Everything comes out, the ghosts and goblins, the mortgage and real estate goblins come out, and what happens on that Friday? It's crazy.
Everyone's faces melt off because if they don't close on the Friday, they literally lose part of their face. And that's just how it goes. It's also like that before any holiday. But I'm going to be honest with you, every day this month has been end of the month for me. It was just nonstop, brutal, issues or fixing things. I mean, for me, it was pretty tough, all September.
I'm glad I'm hearing it from you, too. It seems to be the universal mantra from anybody who's talking about real estate and mortgages right now. We have had, I don't know if there's something in the air or, Mercury's in retrograde, whatever we want to call it.
It's in the microwave.
But it's been an extremely unusual couple of months. And I think we're seeing a lot of challenges. It's not just having buyers or sellers or meeting prices. It has been challenging, from finding the right property, getting it under contract, and then seeing it get across the finish line. Things have changed. Typically, when we're working with professionals such as yourselves and we've got a contract, we know it'll get across the finish line, and it usually does. But the intensity with which what's happening, a lot of changes, a lot of emotion, bizarre things happening in certain appraisal situations. And it's not the buyer mentality at the highest, not at every price point, but they are no longer, sellers have not, I think, they haven't caught on to, it's not completely a seller's market anymore.
Yeah.
So buyers have a little bit more control again. And when you're going through an inspection or you're doing your appraisals and they're not coming in quite at value, they have some leverage. Where before, I think, there was a firm stance on the part of the sellers. And so now you're back to negotiating through some of these hurdles.
Oh my God. I just want you to know you validated me, because I've been sitting in my office feeling like I was crazy because literally I felt like I got my butt kicked all month long, and I was like, what is happening? Like you said, it's in the mercury's in the microwave, all the things, but it's so true, and this isn't just a one thing market. So I want to put the number out there. So we're going to take all your calls, 248-539-9797. We're obviously going to get into all the things. We want to hear from you, especially we're going to get into rates, housing shortage, the possible government shutdown, how that's going to affect you if you have a transaction. And then I want to put Renee a little bit in the hot seat and just kind of get your perspective on how someone can set themselves up right now for 2024. And then on top of the fact, what are you saying to people that have been hesitant over the affordability, the, like the payments, all the things, and they're sitting on the sidelines where they want to buy or sell?
So there's a lot there. First and foremost,
loaded.
Yeah, that's a packed question. I love it. There's a lot happening. No doubt about it. We've got an election a year away, which whether people understand it or not, I don't care which side of the fence you sit on, it is definitely has an effect on markets and economy. We have a true housing shortage, and people are often looking at the national information for their local and specific content. I tell people, if you're looking for the weather report in your backyard, are you looking at the national weather report?
I love that.
No, because it is that it's that divided. I mean, it can be from city to city. It can be truly unique. And so it's a hard tale. People get very confused about, well, I'm hearing on one hand there's a shortage, but yet I'm not seeing, a change in more inventory. We're not seeing changes in prices. Well, you won't if the inventory is pulled back. If you have lower inventory and your demand remains the same, then of course you're going to continue to have that shortage, supply and demand. We thought that interest rates, as they went up, was going to temper the market. Well, I think anybody who's a sophisticated consumer understands that what goes up comes down, what goes down comes up. And ultimately, are they high right now? Sure, they are. Is it going to be probably in the next 3 or 4 years at these rates? Most likely not. And we know that people stay in their homes from 5 to 7 years minimum. Mm-hmm. And so will there be an opportunity to correct that? We are also seeing some prices come down. So people, it is slowing. The interest rates have softened some of that price point, but the name of the game in this market, next year's market, every market is always about pricing.
But people are going to buy houses, right? And John, Becky, and I talk about every day, Renee, and everything that you're saying, it just echoes what we're doing. You're in a busy office. We're in a busy office. We talk about these things all the time. And John and I like to go back and forth on what the Fed should do, what they're going to do, what they won't do. But it really doesn't matter. We have to live in the here and now. And the here and now, John, is the market's the market, right? The market's the market. People are going to buy homes.
Yeah, I mean, they're out there looking to buy. The problem is that, like Renee was saying, people don't want to sell. They don't want to sell their $500,000 home at 3% to move up to a $7,000 home at 7%. They just don't want that jump in payment. And so trying to convince somebody to move in the midst of a increased rate environment is the challenge right now. We've got a lot of good information for people that if they would just listen about how they can use the equity in the home that they're selling to pay down some of their debt, even though they're jumping from 3 to 7%, their overall monthly payments may come down. So you have to look at what it's total money out of pocket. Forget the numbers in the interest rate. Of course, if it doesn't make sense, we're going to let you know. But if it makes sense and the numbers are going to save you money on a monthly basis and move you in the positive direction, then do it.
I'm actually really glad you brought that up because that's the truth. You take calls, and obviously, Renee, you're hearing it. You have the sellers that are locked up with their golden handcuffs of equity, right? And like, oh, I can buy any house. I have $400,000 of equity. Well, it's unrealized until you do something with it. And then in the meantime, you have individuals that overbought because the rates were so low, and now the taxes have reassessed. They can't afford that lifestyle. They have overextended themselves with their credit, and they don't know how to get out of it. So now we're getting calls where I want a home equity line because the mentality is, I got to keep that rate where it's at, and never mind that I'm driving myself financially into the ground. And we take these calls, and can we do home equity lines of credit? Yes. Is that our bread and butter? No. But we kind of look at it and we look at the situations, and cash out refinances, to be honest with you, even though mortgage applications as a whole is down about 27% this time from last year, I'm getting an accelerated amount of calls for cash out refinances. Why? Because people cannot afford the homes that they bought in some situations. You have this, unemployment rates and all that other jazz. But I'm doing a cash out refinance right now. We ran the numbers just to give you an example of what, to John's point, $827 we
They're
are
saving.
saving this individual, and all they're going to have now is a house payment and a car payment. And then we ran the numbers where if you even paid half of what you're saving towards that principal, that house will be paid off in 10 years. Now, you're not going to get that kind of information from your average loan officer or your average bank, or taking that out of a home equity line of credit, because in her situation, it did not make sense because the home equity line of credit was just going to add more to her plate.
So, Becky, what you're talking about is what makes a professional, a higher level of what you're talking about is what people should be looking for. What you're providing is a strategic service, and it's somebody who comes in as a consultant. All of what you just said, being able to lay this out, what John's explaining, everybody here, and that's what we do. The difference is, if people are looking to buy and sell right now, there's always a market and opportunity, and there's always a position that you can maybe pull the equity and use and sell your house, and then be able to leverage that and actually buy something that then again is going to build equity. Maybe you're paying a little bit of a higher price, you're also selling at a higher price. So all of it nets out, but having the strategic design in a plan from your team, both your mortgage lender, your real estate agent, whomever it is, to really look at it and say, all right, taking out, why are you taking this home equity line? What is it going to do for you? Where does it put you in 3 years? Where does it put you in 5 years? Does it make better sense to refi and loop it in? And so people don't often understand the entire impact of that one decision, and they're making, they're making that without understanding the full picture.
For sure.
And that's the problem.
And when we come back, we're going to get more into that, because obviously we could spend the whole hour just on that topic alone. So keep it here. 97.1. We'll be right back. Welcome back. You're listening to the Hardcore Mortgage Show. I am Becky Alley sitting in the hot seat today, and we're going to be taking all of your calls. So if you're out driving around, hit us up 248-539-9797, or you can like the Capital Mortgage Funding page once you reach your destination and not miss a thing. And you can check us out live on Facebook. We got Renee from RLA Real Estate, Keller Williams Domain. She is one of my favorite people when she's in the studio because there's nothing off topic. She can shoot from the hip, and it's going to be honest, it's authentic, and you can't fake it till you make it in this business. That's all I know, and she's no faker. So cheers to that. So I want to kind of shift a little bit to what we were talking about back the conversation. So our listeners looking to enter the market, right? The only thing that ever stays the same in real estate is change. And you constantly have to be evolving to the new patterns of what the market's doing, what the seller expectations are, what the buyer's expectations are. This time last year, the rates were sitting in, I would say like 6.75, we'll say. Now we're, we're low 7 still. You can kind of get that going on, but it's changed the perspective of the buyer, and it's definitely affecting the sellers, even though it's still technically a seller's market.
Absolutely true. I love when people talk about a shifting market, and I tell them, if you don't know that we're constantly shifting, we're not entering a shifting market. You're in one, and you're going to continue to be in one at every phase of every year. So I tell people what changes is math and messaging. That's it. It's the math and how you're getting a mortgage, and the messaging and how we're putting it out there. What that means, the pricing, the creativity in terms of getting a loan. This time last year, we were talking about 2-1 buy downs, talking about rate changes and interest rates to be bought down to get creative and get those lower payments. That's gone. People are now seeing on the horizon, they're expecting interest rates to change in the next maybe 18 months or under 2 years. So they're feeling more comfortable about locking in that rate, holding on to it, and knowing that they're going to refi. And so, in the mortgage industry, you're going to be pushing up your sleeves as we would expect in a couple of years, and that refi boom is going to be back.
And we talked about that last week, John.
Yeah.
We talked about exactly that last week. This isn't your grandmother's or mother's real estate market. It was Becky Alley's grandma's birthday last week.
Oh, love her. I'm going to hang out with her later today, everybody.
And
You're welcome. I'll tell you about it later.
And we talk about it because she'll always say when she bought a house, it was 17, 18%. And then rates went, and which wasn't normal then. And then rates went down to 3%, which wasn't normal. And now they're where they're at. The market has shifted. People have to adjust to that, right, John? I mean, they just have to.
You're going to see drastic changes. I mean, that's what happens when you have, something crazy that happens like a pandemic. We saw rates drop crazy down to the low. Now they're over adjusting and going way up, and they'll stabilize and come back down a little bit. We just have to wait. But to Renee's point, you can't wait in real estate for rates because you're going to miss out on growth and equity and wealth. I mean, that's just part of the math. Like
it's costing you money if you
can't,
wait.
Okay, you can't chase the market. You have to get with a professional like Renee. Whether it's Capital Mortgage Funding that's doing your mortgage or not, you have to make sure you have a team that's with you that is educated to look forward, not just right at their nose, because if you're reading about it, it's past tense. That's why half the numbers that you see we're talking about August, right? And we're already going to be in October come tomorrow, right? So it's just a reality of you have to be with the right people. And so to that point, sellers, right? They're locked up with their golden handcuffs. They don't want to sell. No one's bragging about the $100,000 that they overpaid a couple years ago, but they're bragging about that interest rate. And now taxes reassessed. This home does not fit their lifestyle. But they still expect this multiple offer over, I want to set the price point here. Like, how are you navigating that with that expectation?
That's the challenge, and again, it goes to people are hearing national information. Their local markets are not necessarily matching that national message. The one thing that we know is across the country is that we have an interest rate that's, generally what it is, and we have a shortage of homes. That doesn't mean, however, a lot of these sellers that are currently getting in the market, we see that they want a larger number. Like, I'm just going to sell it for this. I'm hearing all these numbers. I want 10 or 12 or 15% higher than I'm, suggesting they list the property. That is the kiss of death still. Mm-hmm. If you do not price your home correctly, if you don't price anything correctly, I don't care if it's a house, a car, no matter what it is, the pricing is what is going to dictate, and you have to be strategic and understand your market. If you do not get an offer within the first couple of weeks, and we tell our clients at least within the first 30 days, you need to take an immediate adjustment. You need to listen to the market. The market will tell you what the value of your house is, and it will tell you quickly because there are a lot of buyers out there, and so they will be coming that first week to take a look at that property if they're in your range. If you have not sold to that audience of people, it means you have to wait for a new buyer to enter the market, which means they either have to have sold their house and be jumping in. But it is crucial to be very, very in tune with what the market tells you and what those comps say. You cannot just arbitrarily put a number out there. You missed that opportunity maybe about a year ago, 2 years ago, and it's not here right now.
And I want to reinforce what Renee is saying, that if you're working with an agent that's a yes ma'am, yes sir type of agent, and is just saying, okay, whatever price you want me to put out there, that's what I'm going to put out there, you are losing out. You need to listen to your real estate agent. They know what's going on. If they tell you to take a price reduction, take a price reduction. It's not, you're not the professional, they are. And it's very, very important, because there's too many agents that are sitting out there just first time in the market, and there's nothing wrong with that, but they need the tutelage. They need the guidance. And there are too many agents out there that are just saying, okay, I'll take that listing, put it as high as I can. They're going to love me when I sell it for this. And it sits there for 60, 90, 180 days because it's overpriced.
And then they end up selling it for most likely what they heard from a different agent when they were interviewed, and they didn't end
much
up
later,
yeah,
right.
much later.
Conversely, when you're working with buyers and you're going to make offers, the days of a buyer, of an agent going into a seller and saying, let's go $50,000 under, let's go $25,000 under. That's not happening now, is it?
It's not. For the most part, it isn't. And it's tough to make a blanket statement with some of the things. If homes are priced correctly, which they should be, you are going to get within a close range, within a 3 to 5% of that number. So there's that mentality of, well, I'm gonna gouge and lowball. You're not gonna lowball, even if the house is on the market. Possibly, if it's over 30 or 60 days, there might be an opportunity for beyond that 5%. But if you have an agent who is strategically positioning you for the best outcome and success in the market, they have adjusted that price. And before taking, and I give this example all the time, if somebody says, house, let's just say, is 1.2 million and they offer 800,000, and this happens, I'll explain to them as a buyer, if you're the seller, are you going to take that offer, or are you going to, at least, if your house is only worth $1 million, and maybe the 1.2 is overpriced, but wouldn't you put it at $999 first to at least see if you could capture that just $200,000 discrepancy? You're not going to jump that big. So you have to be realistic. Even if a home seems to be overpriced and is sat on the market, there's a strategic number that you have to stay within. So again, having a buyer's agent who understands this, where you can leverage the comps and have real content and numbers to back. It's not just, well, I think it's worth this. Show me. Explain it to me. Let's talk through it. What's wrong with the house? What are the other area houses selling for? What is your price per square foot? What does the house really need? All of those things
that make most people's head explode.
Yeah, right.
I understand.
And you need to know that stuff because that's what you're buying.
Right. And so I want to kind of get into the ugliness of it. People are frustrated. It's a tough market. It truly is. And so we're on here every week, right, saying it's a great time to buy. It's a great time to buy. It's a great time to buy when it works for you. That's really the messaging. It's not just a blanket statement that it's every year and every day 365. It's a great year to buy. It's a great day to buy if it works for you, if you're so inclined. If renting no longer is serving your purpose, if you're not living in that situation that you want to live in, you need to move on. If that house isn't serving you, right? So how are you navigating the emotions of it? Because it is very emotional. I came across September was tough. I mean, literally every deal was tough. We had to throw it over the finish line. I felt like I was carrying everyone and their mom on my shoulders, but we got through it because I'm strong enough. We're strong enough as a company to do that. You guys, John, everyone, we get so emotionally involved because we care about our people, because we've been there before. So how are you navigating the emotions when people are not listening, or you're the second agent in because they had maybe a real estate agent that didn't have the knowledge that you have?
It's every situation, it is tough. I think emotions run high right now across the board, buyers and sellers. There's still a lot of fatigue. When you think about it, we have come off since 2019, when there was supposed to be a correction coming from the pandemic, out of the pandemic. Nothing has been easy, and it's been a very, very emotional couple of years. The strategy that you design and the expectation that you set for your clients is crucial. So a lot of times when people are looking to sell, the first question we ask is, Tell me why. What is the goal here? What are we looking to achieve? What are your needs? Tell me what your lifestyle is expected to look like in the next 5 years, the next 7 years. Are you getting married? Are you planning on having kids? Are you downsizing? Are you right sizing? So creating that strategy. And oftentimes we meet with people who say, well, I want to redo the kitchen or I want to redo this. And we have to go back and say, let's look at the numbers on that. Is that going to add and increase the value of your home in relation to the market in this area? Or are you going to exceed that? If it's somebody who wants to buy some spectacular house in an area that they're not currently living in, we have to add in the taxes. Do you understand that tax rate is different?
That's huge.
Do you understand what it's going to cost you? That when you go to renovate a house, most of the time you have to take cash out of pocket to do that and then refinance, which you might not be able to get that full amount back. So the issue, the emotion, and I think this is where people are really having the challenge, is they are not advised properly from the beginning. They don't find the right team of lenders like you guys and real estate agents like, the Renee Lassiat show and, our team, where we will sit with people and say, we're not talking about selling or we're not talking about buying until we understand what is your goal. And then let's get there.
Yeah. That's everything. You can feel when someone's trying to sell you and versus help you. And, the reality is it doesn't matter if it's 5 years from now, 5 months from now, or 5 minutes from now. It's not if, it's when. It's when it makes sense for you. So we're going to get into lots more when we come back on the Hardcore Mortgage Show. We're going to take all your calls, 248-539-9797. We're going to even talk about the government shutdown and how that might affect you. Keep it here.
Brought to you by the good people National Benefit Plans at the Ryder Cup. U.S. putting up a little bit of a fight, but they're still getting crushed, 9.5 to 2.5. The Europeans need 14.5 points to bring back the cup to Europe. Tigers fell to Cleveland 7-5, but Miguel Cabrera's swan song weekend, managing 3 hits. They tried again today from Comerica Park, 110 right here on 97.1 The Ticket. NFL reinstating troubled Lions wide receiver Jameson Williams 2 weeks ahead of schedule. He's eligible to play next week at home against Carolina. Michigan football today on the road in Nebraska kicks off at 3:30 on our brother station, AM 950 WWJ. Michigan State, a night game, kicks off at 7:30. That one is at Iowa. Spartans a 12-point dog on that one. Speaking of dogs, the group Spartan Dogs for Life canceling NIL deals with multiple MSU football players, but not basketball. Central Michigan hosting Eastern, Western hosting Ball State, Concordia at Wayne State. At the Ticket Update Desk, I'm Jeff Lesson. For more 97.1 The Ticket or Odyssey.com.
We are back, and you are listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. We are powered by Fairway, MLS number 2289. We are an equal housing lender, in case anyone was curious about that. And before the break, we were talking about how is a government shutdown going to affect anybody out there. So as if higher rates, lack of inventory wasn't enough to give anyone in the real estate market heart palpitations. Now we're talking about a possible 2-week government shutdown, and it is going to affect some people that have some loan transactions happening.
Well, Will, if you work for the federal government and you get shut down, you're not getting a paycheck, that transaction has to be put on pause. You have to hold up until you come back, and then we'll verify the fact that you're back to work. It's just that simple. It's not hard to understand. People know it. People that work for the government right now have already been put on notice that they could be shut down. So any mortgage person, lender, realtor that's in the market that has a client that works for the federal government, just know that's going to happen.
Well, but it's not just that. Also, we have government loans, government-backed loans, like Becky was saying, FHA, USDA, VA. These loans are not going to be impacted if they're straightforward loans. You can still pull your case numbers. You can still get a loan done from start to finish. Where the problem lies. Stuck on
realize
is that if you've got unique scenarios as part of those programs, if you need to get a single unit approved for FHA on a condo, it's not going to happen until the program's back up and running. Jumbo loans, if you need tax transcripts, they're not going to stop, but they could take longer because we need to go and get the tax transcripts from the IRS, and the IRS is on shutdown. So they'll take a little bit longer to get back instead of a 48-hour turnaround time. So these are just the things that you have to take into account. Never stop looking for a house. Keep going. It's not going to stop you from closing. It's just going to, on some instances, it's going to take a little bit longer.
And this has been a public service announcement brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation.
This is just a test.
Yes.
This is a test of the emergency broadcast.
I mean, if
system.
only like this government shutdown, on top of and unfortunately, like we support UAW as well, they're striking. If only this was enough to get that inflation under control, just even those moments, just real quick moments to get inflation where it is so that we see these rates pull back. But the reality is that your loans are still going to close. Most lenders, if not all, are going to be working as usual. USDA will be affected. Flood insurance is going to be affected a little bit as far as the policies renewing. And like you said, anything that you're needing to use the government for, it is going to have effect on the delay. So it's just patience, right? It's like Renee was speaking about before the break. Setting the proper expectations up front is key, right? When we know what's happening and we're looking up, or we're not just looking at our nose, we're going to be able to set that expectation, say, look, clearly you work for the United States government. You're on that kind of that clearance level. We know that we're going to have to wait till you go back to work. That doesn't mean that the sellers are going to rip the rug out from underneath you. It's just that proper communication and reaching across the aisle and having that conversation with both the buyers and the sellers.
And that is the message of any market. I mean, if we know one thing, if anyone's been paying attention for the last 10 years, what we know is that we react to things that are happening.
Yeah.
And it's constantly something, whether it's a shutdown or a pandemic or an interest rate or inflation or an election. I mean, we can go on and on. So it's, again, going back to having the people who you are working with in our businesses. This is not about avoiding issues. I've never had a transaction in 20 years, and I probably would say you haven't either, where there isn't a potential issue or a hurdle or a speed bump. And what I tell my clients is that it's not about avoiding those and pretending they're not there. is having people who understand how to navigate this, help you chart your course, and be able to get you to the finish line. And I tell every one of my clients, there's probably going to be a problem somewhere along the line that we can't predict right now. Here's what I can tell you. I have the experience, the expertise, the background, the knowledge, and a team of people around you. If you have the right lender and everybody else, we're going to get you through it.
Yeah.
So just breathe and know that we've got you.
Yeah.
And talk
Love
to
that.
your people, talk to your real estate agent, talk to your loan officer. Because I had a guy who quit his job in the middle of a transaction. Didn't think it would matter. Didn't think we would know. When we do the verification right before closing, guess what? Oh, he doesn't work there anymore. Thank goodness his wife also worked and they still qualified. But gosh, we sit on a swivel here and we have to move and pivot quickly because that's you're 3 days out from closing and all of a sudden, oh gosh, we lost half our income.
But you knew how to do it.
We did.
Yes.
Because you've had the experience, and that's the strategy.
Blanket statement number 16 for the hour. Ready? My favorite one. All transactions close. It's just a matter of when are they going to close. So if you can navigate that, and I always say it, and Becky, it makes Becky's head spin. I go, all good transactions close, Becky. You know that. And her head's going in a whirling.
You know why?
dervish
Listen,
like
I
You know
have
why
fire
it causes
brain. I have
Becky
fire
crazy?
brain.
Because in the
They
midst
close.
of Becky wanting to get something done, Harry comes up with that little Zen saying that he says, and it doesn't do anything but fuel Becky or myself a little bit more. Like, oh,
Well, I look up with my eyes glazed over like, in the middle of because they're okay. So to talk about buyer sabotage, right? Let's just put that out there, okay? I'm going to just lay out what I think is my top 3 of things that people are doing right now that hurt themselves. It is not communicating with their loan officer, whoever it is, about job changes, opening up new debt. These are things that you cannot hide from us. They're going to come out. Just have an open dialogue so we can respond versus react to it, because we're going to figure it out no matter what, because we are pivot masters and we're going to find a way to get you where you're going. But if we can respond versus react, it's a much smoother transaction. You don't have to feel like you're so much in the hot seat. Not keeping your money in the bank. I don't know what's going on, but people are not keeping it in their bank. They're keeping it in their ceiling tiles again. They're like keeping it in their vaults. I don't know what's happening, but keep your money in the bank. And my other biggest one is people don't even try. They are afraid of failure and they're afraid that they're not going to be of that point in their life to be pre-approved, and they're afraid to have that conversation. So anyone that's listening, it all starts with a conversation. And like Renee said, and we are very big advocates, and I'm huge. I say it all the time. It's not if, it's when. Have the conversation with the right people. If you feel like someone is trying to push you into purchasing a home or sell a home or refinance, then stop that conversation and seek someone out that is literally trying to coach you as far as where you're at with your finances and how you're going to get there.
yeah, you hit it spot on. Where is all this cash coming from? It's like Ja Morant at a strip bar. It's just raining dollar bills
I have
everywhere.
never been at a closing where a briefcase
boy.
of money shows up, pops open, and we're like, we're buying a house today. I haven't been to a closing like that ever.
But it's just like you said, Becky, you may have somebody who's buying a $200,000 home, and all of a sudden they have a $20,000 cash deposit into their account. What? You haven't? I've got 60 days of statements here. That's never happened before. All of a sudden, oh well, I just happened to come across 20 grand and I deposited it.
There's a lot of money out there right now.
of
It's interesting, and it's we're seeing a lot of millennials, a lot of younger generation who, God bless them, they're buying homes that at that stage of life. I don't think historically we've seen people jump into that kind of price range, and they're there. They've done well. They've made the right decisions. And they're capable of doing that, which is also kind of tapping the market, because you have sort of you have a lot of money in categories of house buying that I think is not again it's the shortage of inventory, so it continues to perpetuate. And the crucial, some of the most important things. So recently, the last year, a part of strategy for me was my partner Tushar Vicaria and I joined forces. We were the 2 top agents in our company and had been top in the real estate business. We joined to be able to bring more strategy and more opportunity and more listings that we know. And oftentimes we have a lot of things that are coming that just aren't ready for the market yet. So again, having this audience of people know that we have this, just like when you have a situation with somebody who puts $20,000 in the bank, you know how to creatively adjust whatever you need to make a home buyer who might be concerned about doing something. It's all these tools that we have in our tool belt. And, with now it's TVARLA is our group name. We have doubled our tool belt of strategy and doubled our opportunities for our clients by bringing those forces together. And I think people need to understand that, for you guys have a ton of tools in the tool belt. You just have to ask the right questions.
Yeah. So like we have every program out there that you could think of to the point that it would make someone's head explode. So we can get into some of those when we come back. And again, the days of people like, oh, you accept cash and flinging out all their Benjamins. It's not happening at closing tables. So keep it right here. We're going to get into, I'm going to read a couple ticket texts as well when we come back from our break. Keep it here, 248-539-9797. We do want to hear from you. Welcome back. We are in the last 15 minutes of the Hardcore Mortgage Show. You are listening. That's brought to you by Capital Mortgage Funding. You've still got time to sneak in a call, 248-539-9797. We had a couple calls in, but it sounds like they did not want to go live on air. So I'm going to read a couple ticket texts that we have. We got John McCaffrey, EXP. He wants to know if the MSHDA loans will be affected by the government shutdown. So right now, MSHDA is sitting at least 9 to 10 business days.
On approvals.
On approvals.
Yes, they're delayed anyway, so
Yes.
it's going to fit right into the time frame and the sequence of events that's going to happen. So if you're really worried about it, don't be worried about it because they're always delayed. I mean, maybe not this much, but there's always a delay in the approval.
Yeah, so people are catching on to MSHDA financing and down payment assistance, right? It seems to be, we were talking about it right before the break, people run around with money and cash. The thing is that, the biggest issue that I see sometimes, it's not the payment that can people afford, but it is where the money's coming from. There's money floating around, but it's not in the bank. So people are able to utilize some of these down payment assistance programs. And the MSHDA program that we're talking about does offer, if you're a first-time home buyer, you can get up to $10,000 towards your down payment and closing costs. But the caveat of that is you do have to be a first-time home buyer. Yes, John, you have a question?
I do have a question. John McCaffrey from EXP. That was a very good question because now I'm going to ask, are local municipalities and state municipalities affected by the federal government shutdown?
They're not government
No.
employees. Are they?
No, they're state. They're
They're state government employees, but they're not federal.
But they're getting paid.
So MSHDA might not even be affected at all because
Yeah.
MSHDA is a state of Michigan fund.
Correct.
Yes.
So I think
So we're just looking at general
The time frame of the
yes,
approval.
because they
Right.
are just running long anyway. So you're not going to see any more delays than you're not already seeing.
perfect.
Then we had I have an aging parent that wants to sell the home but needs to file low income housing. Are there any? They're on a fixed income. How can you identify any facilities or housing for seniors that are on fixed income? Obviously, you know, what you're talking about is you need to, you'd have to talk to us. You know, if you're looking to put someone in a senior living facility, that's different than if you're looking to downsize them into a condo or something like that. Those are two different conversations. And obviously, if someone's on a fixed income, they make what they make. And it's important to understand where they're at, what you're trying to do, and, you know, what's going to be the best for the family.
But they do have places like in Novi, like Fox Run, they're over a certain age facilities and they have help on site.
There's
right?
one in Birmingham as well. They have them all over the state, actually. And so the first step is to figure out, do you have a home currently? What is the value of it? Is there equity there? Does selling it then offset the cost of what you're looking to turn around and buy? But again, as Becky and John are pointing out, it goes back to what we've been continually saying. It's strategy. It's sitting down, understanding what that income is, what kind of projection are we talking about, how old your aging parent is, and then where that money is going to come from to be able to settle in. So again, get the right
It's
team.
unique, right? Yeah. Every situation is unique. Not one person's the same, not one house is the same, not one's financial position is the same. So you have to be looked at very unique. It's not soup du jour. It's not vanilla. If I want sprinkles on my ice cream because that's what my financial profile calls for, then you need to give someone sprinkles. So give us a call. We are always working. You know, calls at the office. We are here to work for you to identify what is going to work for you and your situation. And speaking of that, we got a couple minutes. We got about 10 minutes left. I want you to get open platform right now. Like, what is just setting you on fire? Like with you guys, you have now this powerhouse. You guys have, merged your teams. You hear collaboration over competition, right? But you're still really competing with everyone, at the same time. But it's about how you can have these professional conversations to therefore collaborate your efforts. So what's really just so passionate right now that you're seeing that either mistakes or positive things or whatever? Because I love hearing anything that you have to say as far as the real estate market, because you're a wealth of knowledge.
Well, I appreciate that. I've always been passionate about this business, and we find that it's easy to get burnt out. Uniting our teams with what we've done and being able to build a team, and KW Domain, I'm an investor in that company as well. What we're passionate about is truly being the leaders in learning and changing and leveling up the industry from the knowledge of what we're talking about, continually giving information to each of our agents and to our team specifically, but the whole company, so that people are ready to handle anything that they can. I think we have a caller.
No, it's not up yet. We're going to wait to see if he pops up. Okay, sorry.
Got it. So it's about really being ready. It's about, for me, the biggest passion project in my life is going to be continuing to educate the people who I'm close with in the industry and on our team, so that we can be the best service providers and strategists for our client. To me, the biggest game changer is getting the referrals. Forget about getting the client. That's fantastic, and we love that. But the biggest telling for me is when I know I've gotten a referral, and over 90% of our business is referral based. It tells me that I've done that job so well that the person is handing me off to somebody else that they care about. And so as long as that is a continuum, that is what it drives my passion.
I mean, you're talking about generational, help for people, when there's nothing more flattering than when you help someone's parents and then you're helping someone's children and then so on and so forth. And, and that is the biggest compliment, when you're not transactional, because people feel that. They feel that from you. And, you're so big on education, but people don't know that you actually came from an education background.
You can't take the girl out of the classroom, but that's part of what it is.
Yeah.
And it's important. And I think that's what's missing. Our industries, yours and mine alike, is very much, people think they can't trust us. We're just there to collect the commission. If you really understand that when you find the person who's not in that mentality, and it's not transactional, and it is personal, and we lose sleep for over our clients. I mean, it is listen, I've been driven to drink at times over, things that I'm so worried about. But the reality is that's what makes us good. And that's what continues to bring our business to us. And so it's not transactional. And that's the message I want people to understand. If you find the right teams, then people to work with, this is a long-term relationship. It should never be or feel transactional. And if it does, you're with the wrong person.
Right. If you get done with your transaction, you say, I'm never going to talk to that person again in my life. You were with the wrong person the whole time. I don't care what kind of rate they got you, how quickly they got you closed, but you're with the wrong person. Because I still get people texting me, where do I make my first mortgage payment 6 months later? What are these documents I just got in the mail? And I'm happy to answer their questions, because then it allows me to reconnect with them and see how everything's going and how the home is.
And we want them to call us with any question they possibly have about a mortgage, financing, real estate, and then we can guide them. But I have a question to ask you about the market. I really want to get your take on it, because every day I get asked, what's going to happen in the fourth quarter and the first quarter of next year? Where do you see the market right now? We're going into the fourth quarter, day after tomorrow, or tomorrow actually. Fourth quarter starts. What do you see for fourth quarter 2023 and first quarter 2024 here in our area in Michigan, when traditionally things taper off?
So they're going to slow down. And they're going to slow down because historically this time of year, we do slow down. People are typically thinking holidays over houses. Just a little note on that. If people are listed, I like to tell my clients to stay on the market during the holidays if they can stomach it. Because if you have buyers, you might have fewer buyers, but anyone who's looking in December is serious. Right. They're not just, kind of, plus you have everybody else taking your house off the market. So you have less supply and you're now kind of the last house standing. So consider that. Yeah. But to answer your question, I do think we're going to have a quiet down, certainly. And then that continues into January. I don't think that we're going to have a flood of new inventory. I think that's going to continue like it did this year and the year previous, where you're going to have a quieter spring market. People are going to wait for this new inventory to come out, and I think they might miss the mark. Don't take your head, don't turn away from the road here, folks, because oftentimes this is when you're going to see price reductions. Yeah. If people haven't sold in the spring and they haven't sold in the summer, now they have to correct their pricing. They should correct their. They don't have to, but if they're well advised, they will. And so you're going to see prices drop. You're going to carry that in, and then the spring you're going to have possibly some new inventory. But I do think we're going to have a correction. We're already seeing it for the first time in 2 years. I've taken reductions on properties. We were not having to do that really much. We were pricing right and we were selling fast. But in the last 3 months, we thought we were pricing right and took a quick correction right after Labor Day, and we have dropped prices. We are seeing fewer showings. We're going to take another price drop on some of these homes. You have to be well aware of what's happening. And then days on market, look at days on market in your area. If they are higher and there hasn't been a price reduction, that's one thing. But if there has been a price reduction and there's still days on market, that's your answer.
Yeah, there's a telltale sign. And what we're going to do is I just wrote all that down for you, and we're going to come back to you 90 to 100 days from now. We're going to see if that's an accurate prediction.
Now, do you stage differently during the holidays?
So
do you, I mean, I know you always want to show space, right? How a house spaces out, but do you stage so that people can see, oh my gosh, look how amazing this home looks, all lit up for every holiday season?
We do seasonal photographs all the time. So here's another little quick tip if anyone's thinking
I don't want you to give all your tricks away.
I don't care.
Tips and tricks.
Hey, you know what? I give away the playbook.
The problem is you could and no one's still going to be able to do it because the message is different. You can give someone the playbook, but your messaging is always going to come clear.
It's the intent, right?
Yes, for sure.
So the reality is, take your photos. If you're thinking about listing your house in the spring, we know Michigan, that's the ugliest time of year. So it's mucky and yucky and whatever. So we are taking photographs now, especially if it's a lake property or it's got, take them now, prepare, and then take them seasonally. So if someone says, I want to list my house in March, we'll start our marketing throughout the seasons so that we have as much information to be able to provide it. So to your point, if you're doing a Christmas or, Hanukkah or whatever it is, and you got glowing lights everywhere, we have the pictures that people can visualize now without all of the
they want to see what the shrubberies look. Yeah.
So smart.
I mean, I think even, like when you come into fall, right, you're, like you even mentioned, right after Labor Day, you're coming right off those summer highs and you're already seeing that taper. In the last several years, it's been a 365 market in Michigan. It's been very accelerated. So when people are saying it's going to slow down, well, in comparison to what? it's been the highest that it's ever been, the more accelerated buying and refinancing over the last several years. So of course it's kind of coming back normalizing. So it feels like it's coming down a little bit, right? To that how it used to be in Michigan.
And I guess, let me correct a little what I'm saying. When I say slow down, I guess I'm saying the prices maybe will come down a little bit because the inventory's not changing.
Right.
The inventory, let's say it again, the inventory's not changing.
We are in a housing crisis.
So there will continue to be a supply and demand issue. But I think there might be a little adjustment in the pricing.
Yeah.
Perfect.
I love it. Anytime this rock star Renee is in the house, I feel like I
You
walk
gotta
away.
tune in.
We
I walk
love it.
away with a wealth of knowledge for myself. I just learned a thing or two. Thank you so much for joining us. And we will be here next Saturday, 97.1, the Hardcore Mortgage Show, 9 to 10 a.m. You can also like the Capital Mortgage Funding Facebook page or the Hardcore Mortgage Facebook page. And you can always check us out live, podcast. Do not miss a thing. We're here to keep you updated, informed, and educated because it's free from us.